Thanks for your interest in International Tax course videos. If you'd like to purchase the entire course, click the link in the description. If you're watching this on mobile, you can click the downward arrow here and it will show you the link to purchase the entire course. Now let's look at some of the tax treaty provisions which are general in nature but are applicable across the entire spectrum of tax treaty analysis. Generally speaking, our tax treaties are binding on contracting parties. Now, when I talk about the contracting parties, what it means here is that if India enters into a treaty, let's say with the United States, then the provision of the treaties are binding on India as well as United States. It is not that only they are binding on India or they are binding only on US. At the same time, they are not binding on any other country, right? There is a small point here which one needs to notice, that in many cases, one treaty may have a particular benefit which is linked to some other provision in another treaty. This could be in the nature of a most favored nation clause, etc., which we are going to discuss later on. But for now, the point that I'm trying to drag home is that the treaty's provisions are binding on the contracting parties. It's a complete code in itself, right? Which means that whatever provisions are there in the treaty, they form a complete code. If a particular term is defined in the treaty somewhere, that definition has to be referred to, right? And then the domestic tax law provision, if beneficial, the same thing that I discussed with you in the last slide, it is only when the domestic law provision are beneficial can apply over treaty provision. Like I told you, if the withholding tax rate under the Act is lower than the rate under the treaty, you can opt for the provision under the Act because they are the ones which are more beneficial to you. Tax treaties cannot impose higher taxes, right? So if a particular income is taxable under the Act at 20%, the treaty cannot provide for a taxation at 30% or 40%. And this is also pretty much evident from the fact that, if I look at it, if the treaty provides for a higher rate or a differential taxation, I can always opt for the provision of the Act. Treaty overrides domestic tax laws. Something what I had showed to you in section 92 as well. What this means is that if there are two provisions, right, the provision of the Act, AP, and the provision of the treaty, if there is a conflict or these are different, then the provision of treaty are going to get preference in terms of implementation over the provision which are there in the Income Tax Act. The Supreme Court has reiterated and confirmed this point in the case of Azadi Bachao Andolan. Treaties are subject to domestic anti-abuse provision. Now, what is an anti-abuse provision? You all understand the meaning of the word abuse, right? A treaty between two countries, let's say for example A and B, are meant to give benefits to people or to assessees who are resident of these two countries. Many times what a person who is a resident of third country C, what he may try to do is he may try to take the benefit of the provision which might be there between country A and B, even though he is not a resident, by framing certain patterns in a manner that he is able to technically claim a benefit here. So in a nutshell, what he's doing is he's actually abusing the provision between country A and country B, right? Why? Because even though he is not entitled to the benefit of this treaty, he's trying to use it. In the Income Tax Act, there could be certain provisions which are in the nature of anti-abuse, right? So let's say, for example, one of the provisions in the Income Tax Act which we have right now provides that unless and until you get a tax residency certificate, you are not going to get the benefit of a particular treaty. So if you want to take the benefit of India and treaty with country B, you have to get a tax residency certificate from country B. If these anti-abuse provisions are there in the domestic laws, depending on how they are worded, generally it is assumed that the treaties will be subjected to these anti-abuse provision. And the last, but the most important, a treaty is not a device to evade taxes. The idea behind a treaty, as it is called, is a double taxation avoidance agreement. The idea is the same income should not be taxed in two countries. You cannot use treaty as a mechanism to evade taxes which are imposed by the source state.